Okay, hello everybody. Welcome. Happy Friday to you all. I hope you're all doing well. I hope life is treating you well. It's just a little after 1 p.m. Eastern time, and we are live on YouTube right now. And welcome to Pinnacle Institute YouTube session here. This is Sam Evans, also known as Mav, but you can call me Sam if you want. One of the market specialists at Pinnacle Institute, with you for about 45 minutes or so to basically show you a little bit about what we do, how we look at the market, and all that kind of good stuff. If you are live, that's awesome. I'm glad to have you here and working in the session as well. And I also would love to kind of I'm looking at your questions as they come in on the chat as well. So we are live on the chat too on here. Prath, how are you, buddy? Thanks for that tweet that you said to me before. That was cool. I'm really glad you liked that article as well. Keep them coming. You will see more on our blog over the coming weeks. I hope everything's great in Mumbai as well. It is October 14th. It is a Friday. So again, no matter where you are in the world, different times for you right now. Now it's about 6 p.m. In the UK, 7 p.m. Central Europe. A little earlier in the day from the West Coast here, but I'm joining you from the East Coast of the US here. And I thought for today's session, I'm always about trying to keep things very, very simple. That's for me the way it always is. How can I keep it as simple as possible? And I think that, one of the beautiful things about the methodology that we use here at the Pinnacle Institute is it is simple in its nature. Very, very, very simple in its nature. However, what I really like about it is that we can make things a whole lot cleaner as well by breaking down, that simplicity even further if we choose to. And that's exactly what I want to do here is just break that down as well. Okay. As simple as possible for everybody here in the room. All right. So let me just check something real quick. I want to share this with you. I just want to check I've got the right link going on here. Just bear with me. Just want to copy this link and just do this for a second. Just check everything's coming on here as well. Because I just got to, the great thing about being live is it's live. The tough thing about being live is it's live. There you go. Lovely. Right. I was getting the wrong chat coming up there. Perfect. Here we go. So Bernardo, excellent. Shubham in there as well. Keith. Excellent. 10:30 in India. There you go. Got another half an hour on us as well. Awesome. So just wanted to check that out for you as well, because like I said, I had the link coming up, but it wasn't actually loading the right way. So we're all good now. Got everybody on here, which is awesome. So yeah, guys, as I was saying to you before, I want to kind of break this down into some simple rules-based stuff. And then again, there are many, many levels of rules to everything that we do as traders, everything that we do in the Pinnacle method for sure. But I thought instead of doing the usual, oh, here's a couple of rules for you, let's mix it up a little bit. I did this webinar or a version. Every webinar I do is live, looking at live market conditions. But I actually covered this topic a couple of weeks ago on a previous session, and it just came to me, and I thought, hey, I'm gonna share this with you guys as well right now. And it's two simple questions we should ask. Two simple questions we should ask when analyzing a trade. So two simple questions to ask when analyzing a trade. I think if more of us did this and we broke it down to its rawest, lowest common denominators, it would be a whole lot easier. Now, again, I want to say this to you guys. I'm going to go over to the live charts. If you want to take things a whole lot deeper in here with what we do at Pinnacle, I'm going to show you these at the end of the webinar, at the end of this broadcast as well. We have workshop tomorrow at 10 a.m. Eastern, another one Wednesday, October, and another one the following week. Again, we run these workshops twice a week. We'd love you to join us for one of those. It's about an hour and 15 minutes with Sam Seiden or Steve Moses. And I'll bring that up at the end as well. But everything that I'm showing you here is going to be covered in a little bit more detail when we're on the when you're on the advanced workshop. Okay, guys? So I want you to think about that. But these two simple questions to analyze a trade, this is a great thing. I think before you even recklessly click buttons, and I say recklessly because too many people recklessly click buttons, we should be asking these questions. Let's just check out the chat. Can everybody now see? Let me just check. It should be coming up right now. Can everybody see my live charts? Can everybody see my live charts right now? I've actually just switched over from that. I want to make sure everybody's seeing the same thing that I am. So if you go ahead into the YouTube chat box there and let me know that you can see that, that would be really awesome, guys. Thank you, Keith. Thank you, Shubham. Awesome. Great. Arif, appreciate you. All right, great. So I'm going to start with the dollar index. Damien, great. If I don't mention your name, I'm not being rude. Let's look at it from this perspective, okay? I got two charts up here. You can see on here a zoom. I've got a monthly chart of the dollar index. Dollar index is my weapon of choice today. And I've got the daily chart of the dollar index that you'll also see. Two charts up here. And I'm kind of a two-chart trader. Everybody always asks me, how many charts do you use? They expect you to say, I use 8 charts and 6 screens. And it's like on each screen. No, I don't do that. I've got no interest in that. Hey, whatever floats your boat, whatever works for you. I've never found a situation where I've needed that many charts. I have one set of eyes. It can look at one screen at a time. The less I have to look at, the easier it is for me to make a decision. And that's what this is all about, guys. Helping you to make a decision. The biggest challenge that many traders face is how to make a decision in the market. And I'm going to say this to you right now. I'm big on this. If you start following me on here regularly, I'm involved in different levels of trading and so on as well. And I work with a lot of systems-based trading, i.e. algorithmic stuff where we've programmed in, key concepts into this. And it makes a decision so much easier because you're not having to make the decision. But if we thought like robots as traders, we'd be better. Who would agree with me on that? If we all acted like a robot when we traded, do you think you'd do better if you just acted like a robot? Do you think you'd have better results if you took the whole decision-making thing out and let something else make the decisions for you? How many of us get in the way of our own trading success, right? That's the question I want you to ask and think about today. Because by having these two simple questions that we're going to cover right now, now remember the title of this, 2 simple questions to analyze a trade, 2 simple questions to analyze a trade, we can get slightly more robotic, okay? Slightly more robotic in what we do and the way that we involve ourselves in this market. So let's tell you what these 2 questions are, because I find it looking at this, people pull up a chart, especially when they go to charts like this. So go down to let's go to a 15-minute chart. Heck, let's go down to everybody's favorite 1-minute chart, and they're looking like, oh, what should I do now? What's the next trade? And they're kicking buttons, doing this, doing that. And then it's like, okay. Instead of looking for a trade, oh, I think it's going to carry on going down because look, it's going on down here. So it's going to carry on going down, and then it goes down and you're thinking this is great. And then it shoots all the way back up. And wait a minute, what's the trend? Oh my God, doesn't it get exhausting? Get the heck off of that chart for a start. Because I'm going to tell you this right now. If you can't analyze a daily chart, you're dead in the water before your trading career begins, right? So I'm going to stick on here for a daily chart for now. If you're just joining us, this is a daily chart. I'm going to stick on this daily chart for now. See there, 1 day, right? Get dollar index. Doesn't matter. A chart's a chart, right? That doesn't really matter. And I'm going to blow this chart up for a second, okay? And before I even look at this and go, well, what's the trend? Well, clearly up. Okay, is it a strong market? Yes. Here's what we should be asking ourselves. Are you ready for this? This is the question. I'm going to write this text note right on the board for you here. I'm going to type it right here for you, okay? Question number 1. So I'm going to put this 2 simple questions. 2, you have to excuse my typing, to ask. 2 simple questions to ask, right? Question number 1. Okay, where are we at? Where are we at? Now, this is going to have a multifaceted answer, but I'm going to talk about this in terms of supply and demand. Hey, all of you guys, you good with supply and demand? I guess you've been YouTube followers of Pinnacle Institute right up until this point. So you're familiar with the concepts of supply and demand. I'm going to make that assumption. If this is your first time looking at the Pinnacle Institute of Trading and Investing's YouTube channel, you may not be familiar with it. I'd say go and look at some of our others, subscribe to the channel, and go take a look at some of the previous ones. I'm going to make the assumption here that we have a basic understanding of demand and supply zones. Can we agree on that, guys? Could you give me a hell yeah if that's the case? So where are we at? And that's going to be in terms of supply and demand, all right? The second question we need to ask is where can we go? Where are we at? Good stuff. And where can we go? And I'm going to go bosh. Now, there you go. There it is on the chart for everybody to see, right? Where are we at and where can we go? Now, let's think about those 2 questions. You're all jumped in here and oh, the guys, I thought, we need to get through loads of charts and find trades. Yeah, whatever. This is about finding trades. Okay, this is about finding trades. If you can't answer these simple questions before you even get into a position, you're in trouble. Okay. All right. So where are we at? Where can we go? All right. Now, that's the questions I want you to ask yourself on here. Now, right now, let's look at where we're at. We're trading at a price of 113.31 right now. Okay. So looking at this price of 113.31, let's just look at this chart. I'm going to zoom in to this section here. So I'm going to get my price levels on here and take a look at this, right? And what I'm going to look at here is I'm going to say, look, I'm going to make the assumption you guys are a little bit familiar with supply and demand, right? So here we go. We have a supply area that's beginning to slightly impact the market between 114.02 and 114.78. And below here, we had a demand zone that didn't work, and we had a lower demand zone right here. That was actually one of our levels we were looking at in our live trading room. We call it the exchange, okay? So here's what I'm looking at right now. Now, notice I've not even decided, I've not even talked about trend. Not even talked about trend. Trend is another whole thing we can get to at some other point, okay? But look, where are we at? So let's strike a line here, like, you know, right there and say, right, we're here at the moment. In fact, I'll do that a little bit cleaner for you, shall I? We'll do it with an arrow. Zoop. There we are. Lovely. So we're right there at current price. So right now above us, we have supply. Below us, we have demand. So let me ask you a question. Are we nearer to supply or are we nearer to demand right now? You can just put S or D in the type. Yeah, just type in the thing, either S or D. Are we nearer to supply right now or are we nearer to demand right now? You just type that in there while I take a drink because I like to talk a lot. Yeah. And I have to give you guys, cool. And I have to give you guys a little bit of time because there is a slight delay on here when broadcasting live. So I know I have to do that. So I will be patient. All right. Awesome. Awesome. We're near to supply. Now that supply signals selling pressure. The last time price was here, let's structure this zone. We had a good strong move away from the area. A great move away from the area that we can see. We spent very little time here suggesting a decent imbalance. So if I look at the meat of this zone right here, we had very little time in this area suggesting that very few orders got filled. And also what I see is a nice clean backyard. Okay, what does that mean? We'll get into that on another session, but there's not a ton of trading to the left, which I really, really like. Now, here's the thing. While momentum is to the upside, while this market is looking strong, we have got evidence of major selling pressure. And this is how crazy it gets, okay? This is how crazy it gets, right? You have to everyone wants a leading indicator. Everybody wants a leading indicator in this world, right? Everybody does. But here's the thing. They're looking in the wrong place because the only leading indicator you've got is this candle here and these charts here and these zones. The less leading indicator is what's in front of me, I have to assume is going to be a problem. Whatever is in front of me is going to be a problem. So what I mean by that is let's just take all this off now. Let's clean this out and just here. We could push up to here a little bit higher, right, into this zone. But guess what I've got? Very limited profit potential because I've only got profit potential between where we are and supply. Because I have to make the assumption that if the market does what it did last time, it's going to fall again from this area. Does everybody understand that? Now, based on the previous momentum, which is to the upside, I would guess that it won't fall too far and there's a good chance that it will retrace and go higher again. We call that a retracement. But what this means is right now, and I'm talking about now, where are we at? We are high up, nearer to supply, which means if I do buy into this market right now, my profit potential is limited. Does everybody understand? As a buyer. Whereas if I look to short at this particular area, if I look to short in this zone, if this zone holds, my profit potential is potentially greater because I'd have a target here and then a target here. I could put this as T1 and I could put this as T2 if this area holds, guys, if this area holds, right? Now, I don't know if this market risk to reward exactly Paparazzi, right? So it doesn't make sense for me to be a buyer, right? Okay. And I'm going to get to everybody's questions as well. So if it takes a bit of time for me to answer it, just be patient. I'll get there. So Zoran, I just saw you put up a question for me. I'll happily answer that in just a second. Okay, buddy? I love answering questions. Okay. So let's look at this for a second. I'm not saying that this market hasn't got buying potential, but to me as an objective trader, right now is not the time to buy. Probability suggests to me that we've got higher to go, but this market needs to deal with supply first. Now, if we get short on this trade, looking at the momentum that we've got on here, then I want to make sure I take the smallest possible risk on either side of this trade. So here's what I'm saying. Right now, where can we go? So where are we at? We are at or near to, in this case, let's type it up. We are near to, where are we at? We're near to supply. Where can we go? Well, right now, the easier path is down. And I'll just put down there. Oh, it's hard to type, but I'm doing my best on here. Supplying down, right? Now, here's the thing. You could turn around and go, yeah, but Sam, the trend has been going up, the trend's been going up, the trend's been going up. I know that. But this isn't the time to be buying into the trend. Do you understand? The better time to be buying into the trend, for me, is either if we retest one of these lower areas that's been untested, or to let the market do this. Oh, I don't want to do that. Oh, no, I don't want to do that. I want to go back to here. I don't want that. I don't want General GE. I want my dollar index. Don't know what happened there. Oh, what's it done on here? I've just lost all my charts. Give me a second, guys. Get rid of that. Perfect. Don't want that. Hold on a second, guys. Let me just pull this over here. I seem to have lost my chart. There you go. Perfect. I was clicking on the product depth bit. There you go. All right. We're back. I know, right? Too many things going on, guys. Too many things going on. I'm back. All right. So, you know what it is? I got all these keyboard shortcuts. I got all these keyboard shortcuts, right? And so sometimes you do the wrong keyboard shortcut. Oh, didn't mean to do that. All right, so here's the go. Where are we at? Where can we go? If I'm going to get a pullback on this market, I want to be buying lower for a continuation higher. Or this is what I meant to do, squash this down. What I'd like to see is the price hit here, absorb supply, break higher. Does everybody understand? And then I can look to buy a pullback for demand again. Does that make sense? Let me ask you if that makes sense. I got to wait. Now, what's the harm of waiting? Well, there's no harm in waiting, but the problem is traders don't like waiting, do they? Most traders don't like waiting, and the reason they don't like waiting is because guess what? They're impatient because they want the trades and they want the trades now. And that is one of the biggest issues that so many people face in this, because they don't have the ability to just be patient and wait, right? So I want to see if it's going to break higher on this, because that's exactly what it's done every other time. Every time it's broken through, it's created new opportunities for me to go long. So here's the thing right now. You got to say, hey, I'm an opportunist right now. Where are we at? Do I have a good potential to go down? Yes or no? Where are we at? Where can we go? Let's look at it from a different perspective. Okay? If I go over to my other chart, which is a monthly chart, let's look at my monthly chart. I have demand down here. And this might give me a little bit of a clue. And I have supply here. Here it is. There's my supply. So I've got supply up here at 118.60 to 120.50. I've got 103.28 to 101.41. Okay? Now, based on this chart, where are we at? Where can we go? Where are we at? Where can we go, right? Where are we at? Well, we're not at supply. We're not at demand. This is macro picture. We're looking at a bigger chart. We have room to do what on this? We have room to go higher. So what does that do? That tells me a little bit about the other chart I was looking at, that daily chart that I was just looking at before. That gives me a little bit of a clue now. It tells me, hey, based on this chart, we're making our way to supply. We're also making our way back to fair value here. There was fair value back here, and we haven't been back to this fair value area for a very, very long time. So the bigger picture to me says it's got even more upside. Do you understand? Which when I go back to my daily chart, tells me, hey, I got one or two options. Buy the pullback, or wait for the break, form a new demand zone and go with it. Does that make sense? Now, can we go short? Absolutely, because this market may stop here, and markets have better trends when they have corrections, right? So you ask yourself a question, do I want to tighten up this zone any more than this? Or do I want to go with this? So Zoran, your question, hey, Sam, would you go inside this area to look for supply or use this area on a daily, or would you wait for a new form on a smaller time frame? Well, you could do all of the above. Let me answer that question. And again, I hate to answer this. I sound like a lawyer, right? But it depends, okay? So Zoran asked a great question. I could go off of this daily chart and say, hey, I like this because the daily chart is cleaner and typically the larger time frames have much better power to them, much better weight to them, and they usually hold a lot better, right? So I would say if my opposing zone and fair value, I would mark this off at fair value. And if you're scratching your head going, Sam, what is fair value? Get to one of the workshops, and because we have not got time to go into it in detail, but Sidon will go into great detail with that for you. But we got fair value here in demand. So to me, if I look at the risk profile versus the reward profile, risk to reward, remember, this is my risk, this is my reward. What does that look like to you? Does it look okay, that risk to reward profile? I think it looks okay, right? So I would say, yeah, I'm happy with that Zoran as that daily area. In fact, there's a little bit of secondary evidence right here to suggest that there's some selling pressure in it. So I'm good with it. That's the answer to the first part of the question. The other part of this question is this. Would you go inside the area to look for supply? You could do that. The danger is you can find a really tiny area. So heck, let's do it. Hey, let's go down to a 1 hour chart. Bang, look at that. Look how it looks on a 1 hour chart. I could tighten this bad boy right up now. I could take it all the way to there. Now look at it on a daily chart. Now it looks even better, the risk to reward on it, right? Okay. No, I'll tell you why. I'm going to get to everybody's questions in the order that they come, okay? Heck, I go to a 15-minute chart and look at that supply zone, right, if I want to. Tighter and tighter and tighter I get, though, guys, guess what the danger is? Bigger chance of missing the trade. So I tend to leave it as I find them. And on that daily chart, I'm happy with it the way it is. Make sense? Okay. Now, you can also wait for it to form on a smaller time frame. You could. But again, the danger you have sometimes is it just may drop so hard it never pulls back. So I look at it, Zoran. The simplest answer to it is, where are we at? Where can we go? Where are we at? Is there an opportunity? What does the risk look like? Where can we go? Where's the opposing fair value? Is the risk to reward a minimum of 3-to-1 or greater? If the answer to that is yes, I will stay with it the way it personally is. Does that make sense? Simple answer to the question. You know, at least I hope it was a simple answer to the question. Shubham, I have a question too. How 10-year-old supply zone on a dollar index still work? There are still unfilled orders from 10 years ago. What an awesome question, buddy. Love that question. The answer is, I don't have a clue if those orders are from 10 years ago. And that's probably not the answer you were expecting. I'm the wrong guy to ask. I don't have an opportunity to look at the order book. I don't have a clue whether those traders are still around trading. They might have retired. Heck, they may be off doing something else completely different. They may be janitors right now because they weren't good traders. I don't know is the answer to that. But I do know something. I do know something, okay? How do you know what is expensive or cheap? How do we as consumers know if something's expensive or cheap? We know that something's expensive or cheap based upon what? Historical prices, right? And so, therefore, if there was a major supply imbalance on the dollar index back here, back in 2002, who am I to assume that there's not going to be a great opportunity for sellers there again? Because as a trader right now, I'm looking at it like, well, if heck, a ton of money came into the market there and dumped the dollar last time, who am I to assume it's not going to happen this time? So yes, zones for sure on smaller time frames are likely footprints of buying now, right? So I can say that, yeah, this is unfilled orders because it was from earlier this year. Daily chart, these are unfilled orders from a couple of days ago, from last month, right? 100% we can say that. Can we with any confidence say, oh man, there's unfilled orders up there, and are they the same people? They ain't the same people. They've moved on. But you know what that is? That's a market signpost. That is an anchor. That is a reference point. Can you go back and look at what house prices were a year ago? Can you go back and see what gas was a year ago? No, don't do that. If you look at petrol prices a year ago, you're just going to get peed off, right? The point I'm trying to make is it's historical, and people, human beings, we the speculators create the opportunity. Does that answer your question, buddy? So the problem you have is a lot of people want the answer, and they want the answer now. They want to see it happen now, and they want guarantees. As a trader or an investor, you're never going to get guarantees. So what you have to work on is probabilities and rules. And the best traders I know, the best people I work with, they work the probabilities. Do you understand? They work, rather than think about what they're seeing, they act on what they're seeing if it makes a rules-based logic. Does that help? I'm going to wait for your answer, okay? I'll always answer the question straight up, as it goes. That's it. No frills, no fuss. It is what it is. Because guess what? Trading is what it is, right? I hope that helps to everybody as well. Papa's saying, are you also a wick watcher when price is close to supply demand? No, because again, it can make you very, it can make you overthink. Do you understand? Yeah, you got it. You know what? You just put that. Shubnam said, I understand you mean to say that value is good for selling dollars. You got it, buddy. You put that far more eloquently than me. There was supply for sure. I'm going to make the assumption there is going to be supply there until the market proves otherwise. Does that make sense? That's what I'm going to do. Is I'm going to make the assumption the orders and the supply will be there until the market proves me otherwise. I lean on stuff until the market proves me otherwise. That's how I work. That's how I teach my members to do it. And that's the same thing on there. All right. I don't watch it because, again, I think I'd be talked out of too many trades. A great example is yesterday. If you take a look at the S&P 500 and the market yesterday, in fact, let's go over to here. Let's look at a different set of charts. Let's look at the NASDAQ yesterday. Yesterday, we had that massive gap down in the NASDAQ. We had a huge gap down in the NASDAQ yesterday. You see this green area here, guys? You see this? In our live trading room yesterday, our rules told us get long. We had a huge gap down in the market yesterday. Take a look at it. Where was it? There's the gap down yesterday. You see that? See that gap down? Our rules told us to get long. If I'd have waited, we'd have waited, guess what? We would have not wanted to take the trade. And what a monster it turned out to be. This zone here, see this area here? This was our short trade that we had picked out a couple of days ago. Higher the market. It's probably going all the way back down again today. Again, on a gap up today after that action, if I'd have waited for a wick, probably would have not took the trade. So this supply zone that you see here on the NASDAQ at 11,178 to 11,203 was a level that was shared with our live trading room a couple of days ago, and a trade we analyzed for a great short yesterday. We also had a couple of shorts about here. If we wait, we don't get the risk to reward. By doing that, we got the risk to reward. Does everybody see that? Okay. So, Baba, yeah, I don't like to do that. But that's actually that zone there, what I'm talking about, this one I'm highlighting, that is actually a trade from yesterday that didn't trigger yesterday, but did trigger today. So, again, we had to be patient and wait. If you didn't get long yesterday, you had to be patient and wait for it. But, man, was it worth it? I mean, that's a big move that we've seen on the NASDAQ there on a short as well. And, again, the news has not changed. That's why I just trust what I see on the charts rather than anything else. Lawrence, how do you deal with several zones on top of one another, especially on lower middle time frames like the 1 hour? That's a great question. I'll just go up to bigger time frames and see if I can find the risk to reward on the bigger time frame, if it makes sense for me. I don't like to mess around with tiny little zones. I'm not a fan of it. This 15-minute chart that you see right now is typically as low as I would go for manual execution and manual trading. I don't really want to go any lower than that. And the reason I don't like going any lower than that is because it all just becomes noise to me. You understand? For the automated things that we run, yeah, I don't mind going low because the machine's doing the work for me in that respect. Okay. But yeah, what I would rather do is if you've got multiple levels on top of one another, go bigger time frames, you know, and then ask yourself, ask yourself the question, is it worth it? Taking the size of the zone, the risk. Do you understand? Is the risk worth it? So, you know, you can get multiple zones on top of things as well. And look, you can refine things down as well. But, you know, like I say, back here, I'm trying to find, let me see if I can go over to one of our other charts and see, because we had some really nice trades on Apple recently. Let me show you. And was it Amazon and Apple? Let me just look at Amazon quickly. This was our, let me have a look on it. There it was. Was it Amazon? This was it. Where was it on here? Was it Apple? Let me just look for it. So these were some shorts we had on Apple the last couple of times on here. No, that was not the trade. Where was it? Let me just find it for you guys. I can't remember if it was Amazon or Apple. If I can't, don't worry about it. I'm just doing what I can to find on it here. Multiple levels on top of another. Yeah, look, I suppose you're looking at a little bit like this, right? See here? You see this area here? This is the one I know I was looking for. Lawrence, to answer to your question. This is where I had two levels on top of one another. See that area there? There was a zone here and a zone here. Two zones on top of one another, the 136 to 138. So on that particular trade, and that triggered at 136, it's down at 108 now, right? It's down at 108. So that area there, that 136 area, if I actually have a look, was our whole daily area. So look, let me show you this. This is a great question you asked. So you had two zones, a little zone here, and then a bigger zone between here and here. So what was it easier to do? Look at the number 136. That was the entry there. Use it as a bigger daily area, and off it went. So we had a short here. We had three shorts on Amazon recently. Here, here, here. Our long area didn't do much. It stopped out. So we're just waiting for the lower area. But that was our previous long across there. You'll see the previous long that we had. Look, it goes way back. So back to your question, you asked me about orders being filled. That was our zone right there. You see the zone? That was from, what time was that? What date was that? That was from 2020. Look at that area, 102.65. That was from 2020. 165. Look what it did from that same area. Rallied all the way up to 145. So it does work. You got to just see it, take it as you find it. But hopefully, Lawrence, that answers your question, buddy. So wasn't that a much cleaner entry? That's short, and that's the area I'm talking about right there. I think that was a lot cleaner than going on the 4-hour chart and having two areas. Just ask yourself if the risk to reward good enough for you, okay? Yeah, I mean, inverse help. It's cool. I mean, you know, do you need it? Not really. I mean, it could be powerful. Like if you look over here, we had a nice opportunity. If I go back over to these charts, I don't particularly use the dollar, and I don't particularly use the dollar that much with. I don't really use this as a daily, right? I don't really use the dollar that much with the S&P and the Nasdaq, to be honest with you. I don't. It's just not really my thing. I'm a little, you know, I'm a bit looser in my own trading, but I know Sidon does, my colleague, and Jasmine, they do. I like it here. I like this. I like it with these two. I like it with the euro and the dollar index itself. So look here. See, we hit supply here. You see that, guys? And it was, I think, October 3rd. Yeah, look. And then we hit demand there. You know, that was they were nice plays, right? That was beautiful. Supply here with the inverse dollar at demand. That's one of my favorite setups. Zoran, I like that very much. I find that that's pretty useful for the dollar index. Right now, I don't really find it's helping me too much. I mean, with the Nasdaq, like I say, it's a personal preference. You know, it's a personal preference. So there was fair value, but the market then decided to finally step on the gas and do something. So markets can stay in fair value, but they have to come out of fair value at some point, right? And when they come out of fair value, they create zones. So there's a bit of fair value going on here, right? But then it formed a zone, which worked out great. So you got to remember, Subnam, that once the market comes out of fair value, it could create a zone. Do you understand? You also asked me, I'm seeing this in the S&P 2020 demand zones working. I just think things macroeconomic conditions were different to buy. But that's the thing, the thinking, right? I do think the conditions are rough, by the way. I'm not going to lie to you. I mean, I look at these markets. I don't think we're in a great place. I mean, like, I really, really don't. Some days I'm just looking at this and I'm like, oof. Like, I am just not feeling that we're in a good place on these indexes right now. I really, really don't. The precedent here is that this market's getting a whole lot weaker. You know, you look at the SPY and everything, and it's just not in a good spot. You know, these markets are, look, if you look, the supply, this is the S&P. The supply zones are holding. But look what's happening here. Look, if you look at the S&P over here, right? Look at all the levels that have worked. The supply formed awesome supply, right? We've had some real nice triggers on supply. Look at all the supply triggers. Ready? Triggered at supply. Triggered at supply. Triggered twice here. Triggered here. Right? And then we recently had one, which I'll mark off here for you as well, that triggered a couple of days ago. I actually triggered, a couple of days ago. Here. Right? Back into the zone. That was this candle I'm talking about, right? It gapped down, pulled back into here and went. And now we're having a thing. We're probably going to give back all these gains, right? Look at the demand areas. This one was okay. This one did nothing. What's really holding here? At the moment, there's a lot of negativity out there. I mean, there's a lot of negativity going on, a whole ton of it. And so, you know, when I look at this market, I think that we are in, you know, pretty, you know, negative conditions right now in the market for sure. I think, you know, fundamentals do play a part. But what I'd always say to everybody in the room right now, to any of the members and any of the people I work with, the chart's always going to give you the heads up, you know? So you have to still, like, let me put it this way, right? Let me put it this way. Because again, if you go back over to my other charts on here, clean this up, bam. And I look at this NASDAQ right now. You know, I got the buy signal yesterday. But what have I got directly above me? I had a buy signal yesterday on the NASDAQ. But what have I got marked off directly above me? Can you guys tell me? What have I got marked off? I may have had a buy signal down here. But what do I have marked off right here where my arrow's pointing? What am I also aware of that you can see just above it? Supply, right? And how those supply zones, all of these supply zones have been working out on the NASDAQ. How have they all been working out? Every single one of those zones. Pretty strong, right? You see how they've all been working out pretty strongly, right? So, you know, you look at it and you're like, yeah, there's a precedent here. There's a lot of weakness in this market right now. And they're holding exactly. Good analysis, guys. Right? So they're holding. So what that really tells me is like, you know, I got to be very careful where I buy. And I've also got to respect that, you know what? There's a lot of selling pressure going on. But what I also have to respect is don't be selling into these big demand zones. Like, back to our question right now. Let's look at the current price action. Right? We aren't at supply. And we're not at demand. You can't really see the demand. It goes way back, by the way. Look. It goes way back. It's way back here. I see the demand here. Weekly chart demand. Does everybody see that? Weekly chart demand. Like, I don't want to sell into that. I don't want to sell into that because that's reckless. It's back to this, where are we at? Like yesterday, where are we at? We're at demand. Where can it go? It's got an easier time to go up. Where are we at right now? Well, we're not at supply. And we're not at demand right now. So let's look at it. There you go. So we're not at supply. And we're not at demand. So what does that tell me? Oh, I've done it again. If I'm not at supply and I'm not at demand, I don't really want to do anything right now. You understand? I don't really want to do anything right now. There's not a trade. Where am I at? Where could it go? Well, I'm not at supply and I'm not at demand. It could go lower, but it could also go higher because the move, if we look on the NASDAQ today, has already happened. And we're now between supply and demand right now. We've got demand lower. We've got supply higher. Right now, where are we? In the middle. Voids. I've never voids as they relate to supply and demand. I'm not really sure, Lawrence. I know your I understand your question, buddy. I'm not ever had that vocabulary. Void of what? A void of what? Could you help me out a little bit there? I'll happily give you my input on it. You need to give me a little bit more than that. Are you talking about a void of orders? Are you talking about a void of price action? Are you talking about a void of volume? I need to be, can you be a bit more specific? That might help me because I've never been asked about voids before. Okay. So tell me what you need and I can try and answer it for you. Okay. So, you know, no matter what we do, going back to our original question, are we at fair value? Yeah, right now we're in a bit of fair value. Yeah, right now we're in a bit of fair value. Yeah, we're finding our footing. You know, I mean, I guess the buyers are feeling pretty crappy right now because guess what? Half of their gains from yesterday have given back again. Right, Arif? Half the gains that we had have been given back. So yeah, I wouldn't be feeling too good about that. But yeah, going back to our original, you know, concept. Where are we at? Where can we go? Ask yourself a question right now. Like, you look at the market. You want to trade the NASDAQ right now? Split up the chart. Where are we at? Well, we're not at supply. We're not at demand. We're in the middle. We're in fair value. Meaning, we can go either way. And I don't want to just say, hey, I'm going to just bank on it going down or bank on it going up. I want to know that I'm entering an area where it's got a higher chance of going down or a higher chance of going up with a maximum risk to reward ratio. Does everybody understand? That's really the simplicity. So my challenge to you is any strategy that you do or any market that you analyze, anything you study, you go back to the two simplest questions that you can ask before doing anything. Where am I at? At supply or at demand? Where can we go? If you can't even say we're at supply or at demand, you don't even want to get the question two. Because I'm not interested. If I'm at the middle, I'm at neither. I don't want to do anything. But if I am at supply and I am at demand, then I go say, well, where can I go to? I can go to fair value. I can go to the opposing level. Now I've got an entry. Most people don't look at the market in that particular way. And I hope that little nugget there gives you a little bit more insight, guys. Okay. All right, cool. Well, listen, I hope you found that useful, guys. I really do. The goal was to kind of simplify things for you a little bit. Take that there, you know, feel free to reach out if you want to. You can follow me on Twitter. I'll put my handle in the chat right now. That's the best place you can see me, at Sam Evans Trader. That's my Twitter handle. All right, you can follow me on there if you want to. Here's our next workshops. I'll just highlight those for you as well so you can see them. All right, you got those up. And you can, you know, join it. If you want to go deeper, guys, my best advice to you is register for one of our free workshops, Talk with Sam Side, and I think you'll really, really enjoyed it. Okay. And I'm here monthly, typically middle of the month. So saying probably around middle of October, I'll be here, typically around the second. I'm going to try and aim for the second Friday of each month. I'll be here to do a 45-minute session with you on YouTube. You find me regularly doing the open exchange and the sessions for our members at Pinnacle Institute. And check out our blogs and so on. And all I can say is happy days. Yes, Sam does usually do the Saturday one, Shabnam. Okay, so check it out. See what he has to say. Everything that he talks about will just be a further reinforcement of the things that I'm talking about as well. All right, guys. All right. Thank you so much. I appreciate it. Have a great rest of your Friday. Have a wonderful weekend. And I'll see you on the other side. Be well, everybody. See you next month. Bye-bye.